Hello, everyone. George DeSantis here with the look at the market. It's Saturday, November 5th, 2022, and I usually do a family Zoom meeting on Sundays, but this Sunday I won't be available. So I thought I would do a YouTube video today and send it out to the people who usually get the Zoom video. So welcome, everyone. Before we begin, I'm going to put up the disclaimer, which is this. And this is simply a screen that reminds you that I'm not a professional investment advisor. I have done this and I do this for my own purposes and share it with family and friends. And some time ago, I started doing a YouTube video as well. So anyone can view it and make of it what they will. So what I usually do is review the general market and then take a look at some of the charts of individual stocks and ETFs, etc., and and see if we can make some sense out of what's occurring and what might occur for the coming week or two. So let's begin by doing that. I want to get rid of this screen for a minute. Well, let's start looking at the market by examining the S&P 500. And I usually like to start with the weekly chart, as my friend Alex Elder suggested years ago. And in all his books, he suggests don't look at daily charts until you examine the weekly chart, because the logic is you don't want to be swimming against the tide. If the weekly chart is down, or if you're in a bear market on the weekly chart, then you don't want to be fighting, like fighting the Fed. You don't want to be fighting the weekly chart. Okay? So that's why we start here. So what we have here on the weekly chart is a lot of things, but I'll try to explain it as clearly as I can. Lots of lines and numbers, etc. But the first thing I might point out is that I drew a line here from the January high. See January? From the January high to the March high. This should be here. Okay, this should be here. From the January high to the March high and the August high. You see that these are the three highs that this trend line is touching. And so in this trend line is serving as resistance. When we rallied up to it, we came back down. We rallied up to it in August, we came back down. Now we're sort of rallying to it again, although we may be in a bit of a trading range here. So should we break above in this area here, we have to be careful that the same thing doesn't happen again. And if you're trading stocks, be aware that you need to watch your stops or have your stops in place when you start approaching this 4100 level here. You see, you got to be careful not to get caught in another downdraft where you give back your gains if you're trading. If you're an investor and you have stocks for the long haul, you have a Costco or whatever, then you might consider just holding it, or Apple maybe. So this level here, this 41 level, 4177 level, between 41 and 40, 4100 and 4177, this is a strong resistance level because you also have this 50-day volume weighted moving average, this magenta line. And so that's at 4177 right now. Of course, that number changes as the market moves up and down. So I'm pointing out possible resistance in a bear market. What I'm saying is this is likely to be another bear market rally. And if it is, it's going to bounce off of this 4100 to 4177 level and come back down. So be careful if you're trading, okay? Now let's look at some other things. How about the trend lines? Well, the 4 EMA, this yellow line, crossed below the 30 here, and the 9 EMA crossed below the 30 here. So since this area here, after this high in August, we started coming down, and the trend lines that I use, these three trend lines, were telling us downtrend. Okay, the trend lines were crossing The faster trend lines were crossing below the slower ones. 4 below 9, 9 below 30. And so here we go. We dropped all the way down, okay? And then we rallied back up. Now we're touching on the weekly chart. We hit the 30 front-weighted moving average, which is this green line, okay? And that's on Thursday, that's on 2 weeks ago. And then last week, we pulled back. This 30 front-weighted moving average, I am going to talk about it later on again in relation to the 9. Okay, we'll discuss that on a different chart. But you can see that once we hit that, that served as a very, very strong resistance level last week. So we pulled back last week. Okay, now on the other side of the, okay, so that's really telling us on the weekly chart, we still have a downtrend. Okay, prices are, these trend lines are below each other. We have a lot of overhead resistance. However, there's a little glimmer of hope for continuation of the rally from here because the parabolic, these two white dots, are now below the most recent bars. And when the parabolic switches below the most recent bars, it is telling us that there's a possible uptrend starting here again, or continuing from this level here, okay? Uptrend. So insofar as the MACD is concerned, you see we had a bullish divergence of MACD, okay? We made a low, we rallied, we had a false breakout, we made a low, and on MACD we made a low, we had the false breakout on MACD, you can see it reflected here, and then we came back down, made a higher low. So this is a bullish divergence of MACD histogram, and that's usually a good indicator that we might get some movement to the upside, okay? Now, the momentum indicator that I use, the triple momentum one that I learned from reading Jerry Appel's book, one of his books, it rallied all the way up here, and when it got to the 4% line, it just bumped off last week. 2 weeks ago, 3 weeks ago, it was rallying, right? It was going all the way up to 4%, but last week, because of this bearish bar, it pulled back, so momentum has fallen off. Okay. Now, another trend indicator that we use is ADX, right? And the histogram, the yellow histogram bars, right? Histogram is still somewhat in an uptrend, although it's pulled back here a little bit. The DI minus, directional index minus, in other words, sort of the bearish one, right? Since it crossed above the DI plus back here, okay, when the market turned around in January, DI minus remains above DI plus, the green line, right? So insofar as ADX is concerned, it's indicating that on a weekly chart, we are still in a downtrend. In other words, folks, in a bear market, okay? So that's what I want to say on this chart. Let's go over here and look at the Ishimoku cloud. On the weekly chart of the Ishimoku cloud, you can see that we are below the cloud. Okay, we want to be trading. We want to be bullish when we are above the cloud, bearish when we are below the cloud. Okay, so we could see that on the cloud we are below the cloud. Okay, insofar as the weekly chart is concerned on S&P. I have a plot of the moving out, the eight week moving. This is a daily chart. On this weekly chart of the 8 week moving average of the close versus the 8 week moving average of the open, you can see that the close is still above, or rather the open is still above the close. We want to see the close above the open as we did here, and we had this uptrend. You see, a little bit of a rally here. So right now on the weekly chart, no good. on Robert Minor's chart, on the weekly chart, we are oversold. We are oversold. And so to confirm what we're seeing here with the bullish divergence of MACD, the stochastic, the 1433 stochastic, is still trending up from an oversold position. So there is room to the upside, but here is that line that plots the highs, right? High, January high, March high, August high, and we are likely to get resistance here again. And so, yeah, uh, stochastic is trending up, but watch out when we get in this 4177 area. Now, this chart I have been using more recently. I've sent it to you last week, actually on Thursday or Friday. Um, Now, this chart simply shows price bars, the 9 exponential moving average, and the 30 front weighted moving average. Now, the 30 front weighted moving average seems to serve as a very good indicator of support resistance. In other words, as long as as long as price bars are above the 30 front weighted moving average, we're in an uptrend, a nice steady uptrend. And also, as long as the 9 EMA is above the 30 weighted moving average, we are in an uptrend. But what happens when we cross below it? When we cross below it here, when the 9 crosses below it here, we get this downtrend. That was in March of 2020, pandemic move, right? And then we cross back above it here, and the market was off and running all the way through 2020 and 2021 for about a year and 9 months. Okay, and if you go back in time, you will see that this tends to hold up. When the 9 is above, see we got a cross here, 9 above 30, and we could see that the 9 never crossed below it again until this area here. This was a bit of a whipsaw, but then it crossed back above it. 9 crossed above 30 again. You had a nice rally here. That's a profitable rally. Then we crossed below it here in 2018, right? Crossed above it again, and we got a nice rally here until March of 2020, till January of 2020 also, right? So I'm using this chart now to answer the question, George, when are you going to put some serious money to work in this market again? I'm inclined to say not before I see the 4 EMA, the 9 EMA, this red line, once again cross above the 30 weighted moving average, okay, and holds there for at least a couple of weeks. Now, especially if we break above this high, okay, then I'll add to my positions above here because it means that this downtrend is over and possibly the bear market has come to an end. So this is one chart I'm looking at very carefully. Okay. Now, if we look at Jake's moving average channel, you'll see that Jake's moving average channel, the weekly chart, again, here's our trend line. You could see that the 10-week moving average of the high is the green line. Okay, prices are just bumping up against it. And in order to get a buy signal on Jake's chart, on this weekly chart, we need to have this accumulation distribution line in green above the 57-week moving average, above here, and we need to have at least 2 complete bars above this green line, the 10-week moving average of the highs. And we don't have that, okay? So on this chart, we see that it's confirming a lot of what we see over here, right? Now, the Elder Force Index, not the Elder Force, the Elder Bull Ray and Bear Ray is trending up. However, look out for that resistance to occur right here, okay? Now, I'm going to take a pause here and set up some other stuff. Now let's see what we find on the daily chart of the S&P. Okay, using a similar approach as we did before, just working through the various charts that I use, that I have here on the screen. Well, starting with these. Um, this chart here, let's bring up this before we go to the current chart. This is the this is a chart that I've learned to use many years ago. It really employs the MACD histogram, and it's too much for me to explain what's involved here. But you can see that when the market when MACD when this red line here starts crossing above, we usually get a bit of a movement to the upside. And when it crosses below, we get, in other words, we give some directional indications here, right? But let me go back to the current chart, which is what I use, and point out a few things here. You could see that same downtrend line from January all the way down here, we saw on the weekly chart. Now, if we look at the moving averages, we could crunch the chart up. You could see that uh, we the four just the four was above the nine from about this area here, and it rallied all the way up here, and then it went into a bit of a little trading range, dropped again, parabolic switched to being above the most recent bars. So the parabolic is saying downtrend. Okay, the momentum indicator, triple momentum, is just hovering around 4%. There is no definitive indication here at all. MACD histogram, we had that bullish divergence of MACD histogram here, back here in October, uh, developed around the middle of October. And we had divergences on MACD, which was this divergence, right? Because as price made a lower low here, MACD histogram made a higher low. We also had a divergence on the momentum indicator and on RSI. We use a 14 period. So this here, that's the default number. So we had divergences, and then the market rallied from there. So the divergences are usually very useful. That's why I like to use the MACD divergence for the beginning of somewhat of a trend. Okay, it doesn't mean a huge one, but it could be just a rally trend, etc. Where are we now? Right now, as of Friday, you could see that on Thursday we pulled, Wednesday, Thursday, well, Tuesday, Wednesday, Thursday we pulled back, and on Friday we had a bit of a hammer here, okay, a candlestick hammer. But parabolic is still above the most recent bar, and so if I had to guess, I am not going to bet that this thing is going to go much higher. Okay, and we saw what was happening on the weekly chart. So yeah, it's maybe in a trading range, in this area here, trading range. So not very much in terms of bullishness here. If you go down to ADX, you could see that the ADX hasn't started trending up. The histogram, the yellow, excuse me, let me drink some water. Yeah, I had a cough. I had to drink some water. My throat is itching or dry. So as I was saying, the ADX is not really trending up yet to say there's a new trend or continuation of the downtrend. It's just in no man's land here, just below 20. Okay, but the DI minus is above DI plus. So if anything, it's more bearish than bullish. Now, RSI 14 is above the 50% line, and usually when that's the case, you have a bit of an uptrend like you had here, okay, when it crosses above the 50% line. You could see the uptrend here, and when it crossed below here, you could see how we started that new downtrend all the way to here, right? So we're in a bit of a no man's land right now. Let's go over to some of the other charts. The Ishimoku cloud is showing us that on the daily chart, we are still below the cloud. We need to get above this cloud before we can become any more bullish than before. Now, I'll show you Robert Minor's chart, stochastic. On the daily, we have to keep looking to see what time frame we have here. You see the daily chart became overbought on the stochastic, and so it's pulling back. That could turn at any time. But just to take a look at these, on the weekly chart, we saw this before, and on Jake's chart, you could see that once this broke down, once the 80 line, the accumulation distribution line indicator broke below the 57-day moving average, this here, we had a major downtrend here. And we still didn't close above this 57-day moving average. And there's no indication of any kind of a buy signal here. There's no indication of a buy signal yet. Okay, so that's where we are on that. We won't worry to look at the Qs because the Qs, I'll bring it up. But they're very similar. Let's look at it. The daily chart on the Qs. You can see that the Qs look very similar. Look at what it looks like here. Okay, very similar. And you see all the ADX looks very similar. So the Qs are not much different at all. Don't see anything much different. Okay, let me pause here and bring up some other charts you want to look at. So let's look at a chart that we often looked at, and that is the chart of the VIX and the rate of change of the VIX here, rate of change of the VIX, the 10-day rate of change of the VIX, and that's a measure of volatility. Okay. Now let me crunch this up a bit and go back in time. You could see that once the rate of change is above 50, as it was in these instances where I have the circles, not really this one, but all of the other ones here, from this area here in 2020, March of 2020, actually February of 2020, you could see that when that occurred, when we crossed above the rate of change above that, above 50, the market came down, okay? And then once we cross below this here, let me show you something. Once the 20-day moving average, this one here, 20-day moving average crossed below the 200-day moving average, the yellow line, see it here? The yellow line, then we had the beginning of an uptrend, this uptrend here, okay, of the S&P. And these circles here on the volatility, the rate of change, the 10-day moving average of the rate of change, that these spikes here are indicating bottoms of these price pullbacks. Okay, it's indicating we hit a bottom and they rally again. There's a bottom, there's a bottom, there's a bottom, and they pull back. Now, right now, we don't have that sort of indication here at all. Right now, if we go to the right side of the chart, which is where we have to be, you can see we haven't had one of those spikes except for an almost right here. Almost, right? Well, we just had a little bit of a rally, but we haven't had another good spike. And what is more interesting now is that the 20-day moving average of the VIX crossed above the 200-day back here. When that happens, it's bearish for stocks, and you could see that the market came back. All right, once the 20 crossed above the 30 right here, you could see that the market dropped all the way down. It's inversely related. What is happening now is that the 20 seems to be coming back down. It's approaching the 200-day moving average, but it ain't quite there yet. So we don't get any good indications from this right now, from the VIX. And another thing is, let me point it out, another thing is that the VIX really hasn't gone above what, 29 or something like that, 28 or 29, okay? It hasn't crossed above that. It hasn't hit 35. I think it hit 33. 33 here, hasn't gone above 35 at all. So let's get rid of the VIX chart and let me go on to some other things. And so I have to pause here. So let's look at some individual stocks and some stock charts.com charts, okay? And we usually start off with Apple. Apple on a daily chart, you could see how it's rallied all the way up here, came back down, made a bottom, rallied up again, made a double bottom. Is it going to move from here with the rest of the market? Maybe. Who knows? It's one of those big cap stocks, if not the biggest. Uh, as far as new high, new lows are concerned, you could see that we rallied we made a number of new highs here. We increasing new highs, right? All the way down from this level, and now we are now at about minus 1228. So that's above minus 4,000. That's not bad. If we look at if we look at what do you call it? The impulse indicator, red, blue, and green bars, Alex Elder's impulse. We're now with a red bar. Let's see what the weekly chart gives us. The weekly chart is blue, meaning, whoops, no thanks, meaning we could go either long or short here. And it looks as though we see this bullish divergence, right? You see the lower low here and the higher low here, bullish divergence of MACD. Quite possibly we continue this little rally that started here and then we hit that resistance as we saw on the other charts, okay? The McClellan oscillator rallied all the way up and it's ticked up again on Friday. That's somewhat bullish. Now, if we go to best choice, we usually look for the trend that we've been looking at, the seasonal trend, was from October 10 to December 8th, okay? And so you could see that indicated with the red line here, the line colored red. At the bottom of the chart here is the price chart, really, the movement of prices, right? So you could see that we are not overbought. We are, if anything, we're oversold still. We're not up here. If we were here, if we were up here, if the S&P was up here, this is the spider ETF of the S&P. If we were up here, we would say we are less inclined to believe in a further movement up. But since we're down here, we have room at the top, so to speak. Okay, what else are we looking at? Let's go to Shaken. On Shaken, let me bring up my master list. I have a lot of lists here. I'm going to eliminate many of them in time. On my master list, I could show you the stocks that have been up the most for the most on Friday. What stocks were up the most on Friday? And it's these: NIO, which is the Japanese, I believe, automobile maker. It bumped up here a little, okay, became overbought. Our core metals is done well on Friday, the metals ETF. And of course, Alcoa is one of those, as is Freeport McMoran. Square, or what is now called Block, was up 11%. And GDX, which is gold, an ETF on gold, gold miners, that was up 10%. This is a Chinese stock. As you know, many times I've said I don't buy Chinese stocks. So you could forget this. PDD, same thing. Monster Beverage was up big time. It went from neutral to very neutral to bullish, but the money flow hasn't been that impressive, although relative strength has picked up. Go down a little bit. Some of the semiconductors are beginning to show some life, like LRCX, which is Lam Research, beginning to show some life, up 6%. Also, Applied Materials up 6%. BioNTech was up 6%. And the KKR, which is capital market stock, was up about almost 6%. These are stocks that are rated bullish or very bullish. I don't like to buy stocks that are not rated bullish or very bullish by shaking. So once I do the scans and so on, I like to buy the ones that are rated bullish or very. See, Halliburton was up 4%, rated bullish or very bullish. What that means is that it's above the 200-day moving average, okay? And many of these other indications here are positive. You see, it has a fair amount of green and neutral, whatever. You can see this was the Steel Dynamics was up a little and it's now oversold. And the checklist is not bad, except for the industry strength. And we have Allstate here. The insurance companies were doing well. Okay, let's leave the master list. What I'd like to do is go, I do two scans. One is a combo scan based on Jake Bernstein's criteria for buy signals, and the other one is a scan I made up more recently of stocks with stocks where the 9 EMA is above the 30 weighted moving average on the weekly chart, and price is also above the 30 weighted moving average. So let me show you how those scans performed last week. So we need to go to October 30th, right, and 31st. Okay, so this first scan here was the stocks on last weekend that were above the 30 weighted moving average on the weekly chart. The 9 was above the 30 and price was also above the 30. Okay, you can see that Crocs was up. Crocs was up the most, 11%. Starbucks was up 8%. Let's look at Starbucks. It was up 8%. Another bullish stock, Arista Networks, was up 7%. This other bullish stock here, Motorola, was up 7%, right? And if we go down to some of the other bullish stocks, you could see that this one, Containers and Packaging, OI, it is now oversold and it was up actually 5%. SPXC is machinery, and that was up like 5 or 6%, 5%. Cardinal Health was up 5%, etc. Here's Steel Dynamics again. We saw that on the master list, right? We saw this one, Allstate, on the master list. So these are the stocks that case Caterpillar, where the 9 is above the 30, 9 EMA above the 30 weighted moving average, and price is above the 30 weighted moving average. There are a few other criteria, but I won't worry to go into that now. Now let's look at the other scan, how it performed last week. Now I made up a short list, okay? Let's see, where is that? Oh, here's a combo scan that I made up also. And that combo scan is based primarily on Jake's buy signal, where you get at least two complete successive price bars above the 10-day moving average of the highs, and the accumulation distribution line is above its 57-day average. Then I add a few other conditions in terms of volume traded, etc. So here are those stocks from last week, and here's how they performed here. But let me show you on the dashboard how they performed last week. It's clearer here. You see, on Friday, this is what they did. Okay, this is what they did on Friday. All right, this is what they did. You could see, take note if you want. You could stop the video, and then I scan down again. You could see it here, and that's on Friday. And you could see, let's take a look at how they did last week. It's pretty impressive. This biotech stock was up. I could look at it on this chart. It was up big time last week. Okay, but let's go back to the dashboard and see. And here are some other stocks that were up not only 31%, but 28, 24. This is a bullish or very bullish stock. And these are all up big time last week. And these were the scans we did last week. We did this scan. Okay. So you can see MNST or Monster Beverage is up again. It's on this list too. Caterpillar is on this list. It should be, just logically. Halliburton also, right? INCY. Again, these are stocks. T-Mobile, right? Raymond James, the financial firm, Bristol Myers, etc. Right? You can see a lot of these stocks here were showing up on a scan. They did show up on the Jake scan for buy signals, and this is how they did last week. Okay? Well, you could always stop the video and take note of individual stocks. I'll have to move along. But let me show you what scans we have for this week, which is November. Let's look for November 8th. Where is it? Here we go. November 8th. All right. So this is how the scans for next week did last week, if you follow that. These are stocks that are looking good for next week, but this is how they did last week. This one was up tremendously, 651%. I don't even know what they do. I think it might be a biotech. HUDI. It's steel. Wow. It went from $30 a share all the way up to $180 a share. International Group Steel. Is it an ETF or let's see. Let's go to the workspace. It looks like it might be. Let's put it here. What is the symbol? Oh shucks, I can't get a symbol. Let's see. Where is that chart I was using? Shucks, where is it? What's the symbol again? I have to move this. I have to bear with me for a minute. I have to move it across to get the symbol here. That symbol was HUDI. Just for kicks. It's very overbought here now. But you could see HUDI was up 70% on Friday. And for the week, it was up big time. It was up big time. So, and it's still oversold. But being all the way here, it's really overbought now. It's oversold on Jake's on Shaken's indicator here, but it's certainly hitting 3 standard deviations. So it will be more risky to buy it here. All right, and that's that one. But let's go back to the dashboard, and you will see some other ones. ABMD, I think this is a biotech. It was up 39% last week. Now, this is a list that we have for the coming week. So take note, and this is the percentage gain that they had last week. Okay, or at least, yeah, last week. So I'm gonna page down a little bit. Once you can take note here, you could stop the video when you're looking at the video. And let me go back down a little bit. You can see these are all stocks that perform well already, but they're coming up on a scan for next week. Let's go down again. Okay. So here's what you got. A lot of them are looking pretty bullish. Pretty bullish. Here we go. You see T-Mobile here. Okay. Now, that's the October 8th for the 9/30 scan. How about the combo scan for October 8th? Let's go up to the top. And this is how the scan that we did for this coming week, this is how they did last week. These are the stocks from how they did last week. Okay. What about how they did on Friday? See, these stocks did very well on Friday. Here's Caterpillar again. Uh, Aristonet, I think it is. Arinet. ARNET. And this is how they did on Friday. This is how they did for the week. Okay, these stocks here. I will page down for you. SMCI was the last one. Okay. GILD, the biotech, was up 14%, but they are now indicated to be stocks that we should look at for the coming week if we want to do any trading. As I mentioned, I am pretty much in cash, but I do some trading within this downtrend. Okay, so I think that's about it, folks. I am going to call it a day. So if you want to do some trading, these are some stocks that you might look at. And have a good week and good luck to you. And we'll do this again next week. Okay, bye bye.